right? So we all know that. Not many traders look to get good at one aspect of trading and look to make other improvements later, right? Because we look at it so much as an all or nothing thing. So not many people think about trading that way. We see a large majority of traders kind of looking for a magic bullet to take them from, zero to hero in one big leap. And they see trading as a binary endeavor, two outcomes, profitable, not, and it's not like a sliding scale for them. So today we're going to look at the development process, so we can have a good idea of what the different elements are that are actually helping traders in the real world, right? So we're actually going to look at 6 separate factors of success. Those that actually, for those that actually make it in trading. And we'll consider the advantages that a lot of the prop traders have over the retail traders. The things that prop environment gives them that retail traders don't have access to, probably don't even realize that they need. And it's these 6 kind of fundamentals we're going to look at today, and we're going to look at how you can actually emulate some of these things from home. So we're not just going to focus on where do I get in. Now, the reason we do this is I did this poll. It was actually at the start of 2017, and it feels like 5 minutes ago. So we did a webinar. We had about 250 traders answer in the webinar. And, we asked these questions. How long have you been trading? Do you track performance? Blah, blah. Now, what we can see, there's not many people from this group actually making money out of the markets, but there's lots of people spending lots and lots of time trying to trade. They're also trading many different methods, jumping from method to method, trying lots of different things in their quest to make a profit. Now, for some people, it's more than 10 years of trying to find that elusive, easy way to trade. And obviously, it goes without saying that there's nothing at all easy about spending 10 years doing something and failing, right? But it happens. And in fact, a lot of people get hooked on this concept of finding an easy way to trade, as if the easy part is the most important aspect of their trading endeavor. In fact, people will spend 10 years, like literally 10 years, thousands of hours on this, not get anywhere, but still the easy part's the most important thing when they're looking for something new. I don't want to do too much hard work, so the time is not an unlimited commodity. Now, in a minute, we will look at what professional traders or the professional traders that I know think is the easiest way to get to profits. And what I'm just going to do, I'm just going to frame this for you and tell you about some of the professional traders I know. So a lot of the trades I know work in prop firms, and there are some different types of prop firms. There are prop firms that aren't really prop firms, that are really just education companies. You can usually tell because they expect you to fund your own account. That's never a good sign. There are prop firms which are basically doing something that Robert DTG has got a great word for it. It's called commission arbitrage or fee arbitrage. And effectively what they do is they get traders in trading spreads, which means their commissions are, they've got 2 sets of commissions for every trade. And the firm is just looking at that trader as somebody who generates those, the fees off the trading. They're not really interested in whether the trader makes any money or not, right? Now, right or wrong, I'm not going to judge that, but basically, that's their business model. If the trader makes money, great, but they're quite happy to have a trader sitting there for 6 months, not making any money while they earn commissions. Another type of prop firm, a bit closer, I know a couple of traders that were trading boutique fund money, which is a bit more like a remote prop firm. It's kind of prop trading. They were ex-prop traders. They were really, really successful, and they were trading boutique fund money. I actually know a guy who got given $100,000 in boutique fund money just because he'd worked for one of these traders. So this is the most profitable trader I know was an equities day trader, and he could pull in $150,000 to $200,000 a day trading equities day trading. Now, we did have 4 researchers because trading equities day trading is kind of a much more research intensive endeavor because you have to find out what's in play every day. And then the other set of prop trades I know a lot of people who are in futures prop firms doing different kinds of things. There are some people who are doing market making. There are some people who are kind of, playing a bit off spreads. A lot of people that are trading outrights. Typically speaking, well, not typically, actually, I shouldn't say that. In a prop firm, there's people making money and losing money. There's new guys that start, they don't make it. The best guys, they're not quite making as much money as the guy who can pull in 200k on a good day. The guys the good guys, they can make 10,000 a day. Then on a fairly decent day, they can make 30. On the really big days where they're kind of piling all in, there's guys getting close to the 100k a day level. And this is all day trading, right? Doesn't mean you're going to make that money. Doesn't mean I'm going to make that money. I'm just telling you about people I know that actually so you do this for a living. And they're all day traders, all very short-term traders, and kind of trading the techniques that I'm going to talk to you about shortly. And I tell you that because this kind of easy way to trade thing is not what most people think. Most people think it's buying the low of the day, right? And none of the traders, I've never met a professional trader who tries to buy the low of the day, right? Now there are lots of other kinds of professional traders that I don't know, right? I don't really know any guys in the options business. I don't know that many spreaders, to be honest. Most of the guys I know are trading outrights. Okay, so just to give you some kind of background on the kind of, when I say professional traders, there's probably lots of kinds of professional traders that I don't know about, which obviously I can't talk about those guys. So anyway, people are looking for the easy way to trade, right? And by easiest way, there is an easy way to trade, right? But to say easy way to trade, it's basically the one with the best chance of success in the shortest amount of time, right? That's really what we mean by the easy way to trade. For retailers, it means something I can learn in a day and repeat without thought. That's what they think the easy way to trade is. So even the easy way to trade that the prop firms introduce intern traders to, they usually like to take people with no trading experience, turn them into traders, and then split the profits with the traders, and they're obviously funding the traders' accounts, right? Some of what we're going to focus on today is what the futures prop firms teach their interns to get them profitable in the shortest time possible. But they still have to be good. It's still hard work, and it's not the thing that's going to make them the $30,000, $40,000 days, 3 or 4 years down the road, right? It's just kind of the first milestone to profitability, right? Now, what is it that differentiates these prop traders learning to trade from you at home? Well, for most firms, the biggest difference is basically this. Now, just to confirm, I'm talking about traders I actually know, so I can't speak for traders that I don't. Talking about traders that stay in trades from minutes to hours, but usually short term, right? Now, there's no guarantee that trading short term, trading off the depth of the market is going to make you money, but it's what the prop firms focus on, right? So I'm presenting the information because the perception that short-term trading is not profitable, and that you need, like a lot of retail traders, to try and buy the low of the day and sell the high of the day to make money, when that's the very thing that is causing the losses. So generally speaking, short-term trade is where the prop firms focus, and that means trading off the depth of the market, or the dome, and not the charts, right? So the dome is advantageous in that it gives you the best view of what is happening in the market right here, right now, how traders are behaving, if the market's picking up pace or slowing down, if traders are trapped or not. That's what it's for, right? It's not really for a historical view, because the prop traders aren't really trading. They're not really that interested in what happened before. They're kind of interested more in what's happening now, okay? But most traders, when they see this, their first thought is, basically, I want to avoid that. They say, that looks difficult. They say the charts are easier. And many of the traders are still saying that after attempting to trade just off the charts for 10 years and not making any money. So with the prop firms, they have to get their traders profitable as soon as possible, as soon as it's feasibly possible, for a couple of reasons. First of all, they recruit somebody and they've got costs for recruitment. They actually have to pay money to train their traders, right? They employ educators that don't come free. After the training, that person's got desk fees that they can't really pay for because they're not making any money. And they're also taking up room in the office, right? So a trader that is not yet profitable is 100% cost to a prop firm. So if there was an easier or a faster way to get to those first profits than focusing on the dome, the prop firms would do it, right? They're just businesses at the end of the day. They're they're not like trading purists trying to tie one hand behind their backs and teach the traders the old school way that's really difficult, right? They just want to make money. They don't care, right? All the prop firm cares about is making money with as little risk as possible. Now, you ask yourself, why would I listen to Peter Davies about that? What does he know about prop trading? Well, the reason I know a lot of these people is they actually work with a lot of prop firms, right? Prop firms are the people that I want to talk to about feature supporting trading software, right? That's what I do. I create trading software. So I'm just simply lucky enough to have been exposed to that environment so I can help people understand what it is they do. In fact, this is me sitting at a prop trader's desk shortly before getting kicked off it. Now, what you can see here is the main three screens are depth of market, right? And that's where all the trading happens. Now, we do also have some long-term charts, but you don't see the Ichimoku cloud. I don't think there's any moving. I think there might be a moving average on that one there. I probably have to have a word about that. They're just looking at the charts just to see where the high and the low, the significant prices are. But this is where the action takes place. So a lot of times, often traders will look at the DOM and they'll say, oh man, that looks really difficult. And, I'm going to come back when I've got some more experience. In other words, that they're going to come back when they've spent some more time looking at charts and not making any money. And I usually reply to them something like this. Do you really think that prop firms are trying to make it more difficult for their new traders or trying to make it easier, right? Because if the charts really provide an easier way to trade in the depth of market, it does mean the prop firms are actually intentionally choosing something more difficult to teach their intern traders, right? So that's the kind of backwards thinking that people are coming out with. So when a trade says, I'll come back and look at that when I have more experience, it usually means I'm going to come back to that when I've spent another couple of years looking at charts and not really getting anywhere. So the first step on the journey to profit for an intern prop trader is very, very heavy emphasis on the DOM. It doesn't mean they can't use charts later, but basically what they'll do is they'll get them to focus on the DOM initially until they get to their first profits. Because once you've got to those first profits, you're not going to let the charts introduce a kind of an unhealthy bias, which is what they do to a lot of traders, right? You see patterns, you see shapes. You don't really see what's going on right now. So, they're going to use charts, but mostly to know where the key levels are. I know traders that actually just open the charts before the start of the trading day and then just close them down. They've just marked their levels and they know where they are, right? They've got like two prices to remember. So, but you've got to, obviously, if you're coming like back towards the all-time high in the market, then you're going to want to know where that is. But, this whole overemphasis on, what did the last candlestick do? And if the last candlestick's bigger than the next candlestick and, and the volume on the third candlestick back, all that overemphasis on chart trading is one of the reasons that people struggle so much. In fact, if we compare like the development process of retail and prop traders, there are a number of key differences other than that we've just talked about that the retail trader should really pay attention to, okay? Because this isn't all about where do I get in, which is really what the chart versus the DOM discussion is about. There's a number of other factors that can contribute to prop traders being more successful. And I think every retail trader should understand these. Now, it's worth noting that not all prop firms are the same. So some prop firms have terrible education programs, right? So we're sticking with what the better ones do. If you've been at a crappy one, you have my sympathy, right? Now, the first difference is fairly obvious. As we saw in the poll results, some retail traders lose money for years, but prop traders don't have that luxury, right? First of all, you might go to a prop firm in London. Even like 7 or 8 years ago, I know a guy who was at a prop firm in London, and he was getting £500 a month, $700 a month, right? They do not pay big salaries, right? Plus, they cost their firms money. So not all prop traders make it, but the fact is they don't have the luxury of being able to lose or sim trade for years, which you do at home. Now, retail traders tend to focus on methods that involve trying to predict the future, right? So, for example, the concepts of support and resistance, very, very popular, right? Everyone wants to know, where can I find support and where can I find resistance? And the best answer is, well, don't, right? A lot of traders, they basically see a market moving down and all they want to do is find support and trade it, right? But ultimately, what that means is when you've got a market moving down and you buy it over and over again, every time you buy that market that's moving down, you are trading against the market, right? And that's why a lot of people fail. One of the big reasons people fail is if it's going down, sell it. If it's going up, buy it, right? Just make that one change. Forget everything else in the webinar, right? Just make that one change, right? It'll make a big difference to your trading, right? So they ask questions like, what's the best way to find support? Or what's the best way to tell if support is holding? They tend to not ask if the concepts of predicting future turning points in trading is valid in the first place. Is it what professionals do? And from what I can see, generally speaking, no. But that's a discussion for another webinar. So what prop firms tend towards is methods that trade what's happening right here, right now. For example, they might go with momentum, or they might see traders stuck and trade against them. They might trade increasing volatility after a news release, etc., etc. They're trading what's going on right here, right now. Now, all trading to some extent involves some sort of prediction, because after all, even if you trade what's happening right now, you are kind of predicting that it will carry on happening, right? At least for a while. But prop trading is very much more in the moment and about reading the activity of your fellow traders in the market right here, right now. Then there's the approach, right? They're given instructions at a prop firm on how the markets behave and how to take advantage of that behavior. They're not given a cookie cutter set of trading rules, right? It's more a process of discovering what works for them. So they get to do a lot of drills and a lot of drills and a lot of drills. And out of doing all that drills, and they're going to get they will get a whole bunch of setups that they can potentially use, but they have to find the one that works for them. Through doing drills and through exercises, they're kind of going through and discovering what works for them. But they're still very, very focused. They can't just switch from one technique to another each week. They can't try a technique today and then try a different one tomorrow, right? So they're very, very focused. Now, one big benefit in a prop firm is obviously there's a lot more conviction that the techniques they're learning actually work, right? Because they're in an office full of people using similar methods. So, yeah, they are more focused, but it is actually easier to maintain that focus in a prop firm because you can see every day people making money, right? Now, accountability is another difference. Your average retail trader is accountable to absolutely no one except their spouse, but in almost all cases, they're not telling their spouse how it's really going. And after a bad day sim trading, your retail trader can just hit reset. They can purposely ignore days where they went completely off plan and tell themselves, well, I'm not going to do that again. At a prop firm, you have management, right? Management that could one day walk up to you and say, look, it's just not discipline that traders apply. You go in a place like this and you see what the big guys are doing, and you've got all these big traders doing loads of money and they won't even look you in the eye, right? And you can see people there and you want that. You're not going to screw around, right? You are not going to screw around. Now, along a similar line is journaling, actually tracking your own progress, finding out what works for you. In that poll, 3/4 of the traders aren't doing it, right? They know they should do it, but they just don't, right? After all, there really is nothing worse after a bad trade than writing down what an idiot you were, right? It's hard. But the trouble is that history, that journal, is actually where the gold is. It's where you find out what works for you. You might not realize that there's some certain behavior that's actually working quite well for you if you don't track it, right? And then finally, there's contact with other traders. In a prop firm, you're immersed in a trading environment. You can talk to them, you can chat if you're bored, go for lunch with them, talk about what they're doing, talk about what you're doing. Just like we talk to traders on Skype and I talk to traders regularly. It's just great to talk to the traders, right? I've got a few close professional trader friends that I speak with on a really regular basis, right? And just to chat about life and the markets. And a lot of the time, it's just something as simple as, you're not doing very well on one market and you have a chat with a trader friend and he says, yeah, well, haven't you seen this in the market that's going on? And it'd be like, oh, no. And it's just sometimes there might be something you haven't noticed that somebody else sees. You might find that you're doing badly and lots of other people are doing badly at the same time. And so you know that it's not you. But there's a huge impact of actually having contact with other people who are trying to do the same thing as you. It's a very lonely business sitting at home trying to do this. Now, once you understand the impacts of these factors, you can start looking at ways to replicate them. After all, just because prop firms benefit from these things and you don't, doesn't mean you can't have them, that there's no way to replicate them. Just means you don't have them yet. So let's walk through these elements again and see how we can replicate them on home. So first of all, making small, frequent trades. Now earlier on, I did mention the term first profits, which is another concept some retail traders misunderstand. I recently had a chat here, it was quite funny, with a very, very frustrated trader who was breaking keyboards on a regular basis, trying to trade big moves on crude. And this is someone that's been losing at trading for over a decade, right? And he'd had a bad day, and he came and contacted me on Skype, and he said, this is crap. He said, nobody's making any money trading, right? It's impossible. Nobody's doing it. And what he was doing was very typical. He was trying to buy the low of the day on crude with a view to getting a big 50-plus tick winner. So instead of those big winners he was looking for, I said, look, can you just trade on a live account and get a 3-tick winner on crude right now? Now, there was no reason for 3 ticks. It was the first number that came in my head. And his reply was no, because he's not even trading a live account anymore, right? So I said, okay, wait there. Give me 2 minutes, right? So 5 minutes later, I just showed him this, right? And it's obviously nothing special. 3-tick winner on crude for 3 contracts. And I'm not even a crude trader, really. But I did notice that crude was had momentum when we had the call. So it's just $90 profit before commission, doing nothing more complicated than seeing market in an up move and trying to get in on a bid, right? The trade itself lasted less than 2 minutes. Now, obviously, you're not going to pull 3 ticks out of crude every 5 minutes, right? There's going to be hours with no trades and there's going to be hours with lots of trades. But in the example, it was just 3 contracts. You could scale it up. But let's stick with $90, right? So let's say you can pull $90 out of a market 4 times an hour, 2 hours a day. You know, that's $360 an hour or $720 a day. That's not going to buy you a Ferrari. It's not going to make you $10,000 a day. But it is a step up from sim trading or losing. Now, many losing traders would look at a 3-tick trade and say, well, not even worth learning that, right? Yet they're quite happy to sim trade and lose for another 5 years trying to find the way to buy the low of the day, right? So profit is not a destination in trading. It is merely a milestone on the journey. You don't have to become profitable and then suddenly stop improving. You know, once you make small profits, you've got a much better idea of what does and doesn't work, what trading's all about. You can scale up, you can add markets, you can add new trades. There's lots and lots of ways to grow as a trader once you get to that point. Now, prop traders use very different platforms from the ones you see at home, and I'm sure you all know what they are. You know, platforms that are focused very much around the DOM, that are focused on performance and reliability, platforms that really don't pay that much attention to charting functionality and kind of have pretty crappy charts, you know, because what happened is not as important as what's happening right now. So these platforms where trade execution features are higher priority than having 300 or 400 indicators, right? So lightweight platforms that aren't bloated with lots of shiny trinkets to attack novice traders. Platforms that are also quite expensive and for some people out of their budget as retail traders. Now, we've got our own platform, as you know, and our platform kind of does the same thing. It focuses on right now and focuses on trying to perform under pressure so the platform doesn't bog down when the market picks up. Now, the platform is a key element of what you do as a trader. It's got to be focused on delivering what you need to make decisions and to be able to execute clearly. Now, just because we support prop firm techniques, obviously it doesn't mean there's still no room for innovation, and trading tools are moving forward every year. So prop firms have historically tended to just use one of a few professional platforms, depending on the type of instruments they trade and kind of depending on which back end they're using, which they don't always have a choice about where they're going to, you know, which technology they're clearing from. Not been a great deal of innovation within those leading platforms, to be honest, although it's, as we said, CQG did just buy Market Delta and add 20-year-old footprint charts. So here we can see the Jigsaw day trader platform. It's in use today both in prop firms and by a lot of home traders like you guys. You know, you can see typical order flow action here on the NASDAQ. You can see market moves up. We've got buyers trapped up here. Market sells off. Head towards an area here where we've got a lot of buyer liquidity. Some sellers get trapped here. Before we get to that area, market moves up. See a head fake through the old high and some buyers trapped again. Market moves down. Very, very typical action on the NASDAQ, on the index futures. Obviously not for the past couple of weeks because the markets have really gone in a tailspin. That's very typical of how a retail trader is going to set this up. This is how your average prop trader is going to set it up, right? So this is a sort of screenshot. I know this puts fear into retail traders, okay? this is where you run back to the comfort of your price charts. The charts, even if they haven't made you any money now, that you're really comfortable looking at. Now, the problem people have seems to be the numbers, right? But you're not trying to read all the numbers anyway. So charts have kind of given people this idea that the market is moving from left to right, right? That's how we see the market, left to right. So I want you to just close your eyes briefly, forget about left to right for a minute, and consider the market as a pole dancer, okay? If you don't know what a pole dancer is, you can ask Danny at the end. Okay, so he or she is going to be moving, as they do their show, they're moving up and down the pole, just like price moves up and down the ladder. And it's this movement, obviously, as a member of the audience in the past, it's that movement you're watching and taking note of, right? So the pole dancer might move up the pole and kind of struggle to get any higher. Although, you know, to be honest, I don't know enough about pole dancing to know if that's actually possible. But let's just say they hit a wet spot, right? So you can see them trying to get higher. You can observe that they're stuck. They're failing to move up. And in the end, you know they're going to start sliding down. And that's what this is all about, really. About watching something move up and down rather than something that moves left to right. So beginners to this are going to focus mostly on just trading one instrument. The other chart, or the other domes there, I should say, they're really there just to give you an idea of how active the markets are, where the correlated markets are cooperating. Center line is really important. Allows you to easily eyeball the relative changes between markets. You can just reset all your domes. You know where they are, and you know that since you reset, you know, VIX has ticked down, the DAX has ticked up. It gives you a really easy way to just kind of eyeball where everything is after your reset point. You know, but even when you're looking at those other markets, you know, if you're trading the VIX futures, you look at the other markets, it's usually just a 1 second glance to see what's happening. Now, the obsession with big money by traders that consistently lose, you know, trying to buy the low, really is putting up a barrier to success for them, right? So if you're making $0 a day trading, then $100 a day is better. You know, it's better off your bank balance and much, much better for your confidence of trading. So, you know, there isn't really so much a question of where to enter the market, really. Just one of the developmental issues that new traders face. You know, so right from the start, they've decided some profits not a worthy goal, and that only massive home run trades is their focus, and they end up looking in the wrong place, at the wrong tools, wrong techniques, following these kind of wild dreams, trying to do something that really most professionals can't really do. Now, from an approach perspective, obviously, there's lots and lots of educational material out there, and we have educational material too, but what we tend to do is not a one-size-fits-all, right? So we don't think, or we don't believe for a second that everybody that comes to us actually needs any training from us. Okay, a lot of people can make their own way. So what we tend to do at Jigsaw is we kind of we believe in a layer approach. So an approach where you can actually just layer in things. So if you see here, this is what everybody gets for free. About 10 hours of videos of basic training, and it just kind of introduces you to the concepts of order flow. And if you're kind of nearly there as a trader and just looking for some refinement, then that would absolutely be enough for you. You know, you've got your theoretical information and your practical information, the actual hands-on stuff. Now, it's the drills, and you can find drills. If you look on the internet for market drills, there's lots of places where you can get market drills. It's the drills that are most important for the prop firms. So your average prop firm is going to spend during the training program, a 12-week program for an intern trader in a prop firm. It's pretty intensive. 75% of that will be hands-on. 75% is you playing with it. It is not, they're not teaching that much stuff, right? They're actually getting you to engage with the market, and that's what we do. So we take this approach of just layering on. Sometimes we do trader reviews where, you know, we'll chat with the trader about where they are, and we'll say, okay, well, these are the next steps we think you should take. But remember, we said earlier on that you can't learn. Like, for instance, you got hours of videos there. You couldn't watch all of those videos and over the weekend and apply the techniques in all of them on Monday. You wouldn't have retained the information for a start, and it would just be a bunch of confusion. So what we tend to do is just say to people, right, just focus on this one thing. Now, for a lot of people that come to us, the first thing we get you to focus on is trade management. In other words, once you get in a trade, try and get some breathing room in a trade or cut the trade as quickly as possible. Because it's actually the easiest skill, because it just really involves being able to read momentum. You've either got momentum on your side or not. Whereas entering the market tends to be about is this particular setup occurring? Are these traders doing that? Do I actually see some other guys coming on the other side? Once you're in a trade, it's pretty easy read. It's either with you or against you, right? So sometimes we'll just say to somebody, just get the trade management right? And so they might watch this video on trade management. There's actually a couple of videos on trade management. They might watch the videos on trade management and then not watch anything else for a couple of months and just work on their trade management and get one benefit, right? Get one benefit before you can get the next. Now, you might be able to cram full time for months and months and months, right? And you might be able to say, right, you might be able to work 40 hours on your trade management and really get that skill. And then once you've got your trade management in, then you start to layer on top of that. But basically, what you need to do as a trader, you need to get some, whatever you learn, get good at that, and then learn something else and get good at that, and learn something else and get good at that. And everything is incremental, right? And you have to squeeze the most improvement out of something before you move on to something else, right? And if you don't respect trading, the art or the skill of trading, if you don't respect it enough to put, to really work on stuff, you won't get anywhere with it, right? It's not that kind of, buy this course and you'll be profitable tomorrow. It doesn't work like that. So for a lot of people, refinement, nudging the right direction, but the key is build on what you've got now. Now, do bear in mind that, we get a lot of people who are nearly there, and that's great. And people who are nearly there just need a nudge in the right direction. We really try and tell people, we try and push people to not starting again and not making changes that would really be starting again, right? So if you've been watching crude for 2 years and then you start trading US Treasuries, it's really starting again, a completely different market, right? You're losing a lot of that time you spent on crude. But there's plenty of people that, they're not profitable, not even close to it. And there's a high probability that nothing's going to fix it, right? It's just some people are like that. They've not really found anything that resonated, not found anything that worked. If somebody comes to me and says, look, I'm trading Elliott waves with Ichimoku Cloud on top and I'm not doing very well, can the order flow fix it? The answer's like, no. I mean, this personal opinion, right? If you're trading that now, I apologize. A better example, if somebody says I'm trading horoscopes, can order flow fix it? The answer is no, of course not, right? If there's no common sense behind what you're trying to do now, we can't really help. We do talk to people about in their individual cases, but for some people, just going to be better off with a reset, right? And for that, we do have one offering, which is for the reset people. Which is an institutional course that we actually, it's actually delivered by Axia, a prop firm in London. And it's a course based on trading short-term setups, prop firm setups, no bias, no preconceived notions, no pre-market prep, just basically trading what's in front of your nose, right? That's what the institutional course is for. If you look at it on the website, really for people who bring nothing to the table, right? And it's your choice. We're not there to make people do something they don't want to do, but we're happy to give people an opinion if they give us some history, but just don't email me saying, I get emails from people saying, look, I'm not making any money right now. What can I do? And it's like, well, you could do by giving me a little bit more information. So it's usually better to have a discussion about that. Now, accountability is also interesting because at Jigsaw, we thought long and hard about how to make traders more accountable. And in the end, what we did, we came up with a leaderboard, a kind of league table for traders. It is optional, but it is a very valuable skill development tool. It's been running for about 4 months now, and it has been instrumental already in helping some traders really improve just by seeing what other people are doing. So to encourage people to opt in as well, we do actually give away a $500 monthly prize. Right now, I think there's about 120 traders opted into it. Okay, you can see it here, right? So we got this leaderboard. It doesn't show your full name. You can pick a display name, so you'll be anonymous. But you're going to see everything you traded, right? So you can't delete trades, you can't reset accounts. It is literally going to be as pretty or as ugly as the trades you make. Now, the interesting thing about this is it's not based on profitability, right? It's based on consistency, right? Because consistency is what's going to get you from a simulated account to a live account at a prop firm, okay? In fact, the consistency rating was actually developed based on me talking to a prop firm in the UK and finding out how do you decide to let a trader go from sim to trading real money. And we had a chat about that, and they told me how they rated it, and we turned that into an algorithm, and that's what it is, basically. Now, here's the thing. There are traders that join this, and they get about 2 weeks in, and they opt out because they feel they're going to end up at the bottom, right? Even though they can pick a display name where nobody's going to know them, right? But it's those traders at the bottom that need this the most, right? And this is just another form of self-sabotage for traders. You know, people don't want to see their own bad performance, right? And the problem with that is by not looking at your bad performance, you are not going to see even minor improvements. So you might be really, beating yourself up about your performance, but if you can't actually see the minor improvements in there and focus on those, you won't get anywhere, right? So you've all figured out that, trading is a tough game. And let's be honest, if you can't face your own bad results, right? If you can't look at your own results because you're ashamed or it makes you feel bad, you're probably never going to make it as a trader. Okay, you've got to start facing up to your results and actually seeing, breaking down and finding out what's going on, right? So you've got to toughen up and stop hiding from your own trades if you're doing that. Now, as well as the leaderboard, you can actually also share your trades with other users, and they can share theirs with you. And that was primarily developed for the prop firms. There's a few prop firms that are interested in using the leaderboard to look for talent so they can hire them. And so the step one would be to find somebody that they like the look of. The step two would be to share statistics so that as that trader's trading, they can actually see how they're doing, pull that up on a dashboard. There's another use for it is actually to have a trading partner, have somebody that you're accountable to, or an accountability partner, you might want to call it. Somebody you share your trades with, right? Just so that you're accountable to somebody, so you're not just resetting your sim account or having bad days and writing them off and not learning from them. Now, the next thing was journaling. Now, journaling with Jigsaw is automated, so you don't have to join the leaderboard to be journaled, right? As mentioned, you can't log selectively and you can't delete the log, right? Once your trade information goes there, it's there. Now, I know there's a minority cases where you could legitimately argue that you should be able to delete some trades or delete accounts, but bottom line is we just didn't want to build any loopholes, right? So it is the way it is. You do something, it's on there, right? It'll be on, generally speaking, once you make a trade, it's on the server in seconds, and then you'll be able to use the tools to do some analysis on your performance and try and figure out where your performance is changing over time. So here's the dashboard that our traders use. So if we just quickly kind of go and look what's on there, you can see we've got 2 periods there, so we can actually do comparative analysis. In this case, we've got January here in green and December in magenta. Whatever you float over, you'll see the numbers behind that. Now, you can actually filter trades by instruments, filter by accounts. A lot more filters coming soon. So you can actually zoom in a little bit on what you're trading. Trade distribution is interesting. Actually shows you what time of day you make the most trades and what time of day you make money. So we've got the third highest period here is 5 o'clock. It's also a period where this guy loses the most money, right? Interesting data point, especially if you're looking over a long period of time. Similarly, Friday, not exactly the highest volume day, but I think you'd be better off not trading it. So you can see gains on Monday to Thursday, losses on Friday. Very good information that you can slice and dice, actually try and figure out where you're making money, right? Now we can also see a trade breakdown here by account. So we've got the accounts here. So it's a trade distribution by account and the performance by account. Okay. This chart we can see also a breakdown of winning trades, losing trades. So you can see here what we've got. The DAX and the ES are about 50-50 in terms of proportion of overall winnings. But the S&P is contributing much more to the losses than the DAX. right? So if you were trading this, one of the things you might want to think about is it actually worth overall trading the S&P, right? But the power is actually be able to crunch the data. So you could actually take the S&P out of that equation and just filter for the other instruments traded and actually see, okay, what happens if I take the S&P out? And then all of the statistics will reflect the statistics without the S&P involved. So really, the way we see it is knowledge is power, right? And knowledge of where you're really making money and losing money allows you to make more powerful trading decisions. We've also got some statistics at the bottom. Statistics you all know, average daily gain, loss, average winning trade, all pretty common stuff. Now, the final key is being in a community with other traders. And you've got that here. Obviously, you're on the community here. Very, very good thing to see. We've got a few different ways ourselves that we bring traders together. One of them is people are welcome to bend my ear on Skype, as you saw a few slides ago. I've kind of turned off Skype on my phone now because people keep calling me at 4 o'clock in the morning. Like to give me calls after the market closes when I'm in bed. But we also have a chat room ourselves. It's a free chat room, mostly active during the US morning session. There's no moderation. There is no leader. It's just a gathering place for traders to have a chat about trading. In this case, it's traders all focused in the same direction, same family of techniques. So you're not going to find anybody in here talking about trading horoscopes, moon phases, Elliott waves, Ichimoku clouds, or any other stuff like that. Now, you can chat in the main room. You can also have one-on-one video chats with other people. And the people that get the most out of this are generally the people that get on and engage, as with the room we're in now. Like I say, it's not moderated. It's all nice, regular people with a common goal. So, there's no need to worry about sounding stupid. Nobody's going to shout at you. Fine to ask questions, join discussions on market activity, tell people where you got into your trades, which we do a lot of, obviously. Or even just have a chat to avoid boredom trades. And if you do engage there, you will get feedback. So if you post a trade, people are going to comment on it. Somebody might say, well, you went long or I'm short. Doesn't mean you have to get out of your trade, but people are more than happy to give their perspective on what's going on. And it's really getting those perspectives, getting that feedback, just being in touch with people. If you're in a chat room, like you're in here, and you're there every morning and you know what people are thinking every morning, you get other traders' opinions every morning, just kind of helps you refine the way your decision process goes as well. And also makes you feel a bit less lonely. Now, one final aspect of trader development that we should consider is that a pretty high percentage of the successful traders got very close to giving up along the way. Okay. In fact, I had a similar experience. I actually worked in Japan for 6 months and actually had the worst time. Really, really bad time. It was like banging my head up a brick wall every day. And I couldn't get out of it, though, because I'd actually committed to a 12-month contract. I was self-employed. There was no way I could get out of it. And after 6 months there, I remember going home and just really almost crying because I just didn't want to go back to this place. That's what a wimp I am. And instead of crying and feeling sorry for myself, I just said, screw it. For the next 6 months when I go back, I'm just going to not care, right? I'm just going to stop taking it so seriously. I'm going to go, I'm going to smile at them, and I'm just take their money, right? And the moment I did that, I had an absolutely wonderful time. And you hear similar stories in the professional trading world, right? People reaching a really low point, right? And then suddenly the market becomes clear. It's like being an alcoholic, right? Hitting rock bottom. It's probably very similar, in fact. You're seeing people around you making it every day, but you're just not there yourself, right? You're feeling like, oh, shit, I might as well just give this up and get a real job. So just like the physical elements we've discussed today, it does really seem that some traders need to go through this phase before they they see the light. It becomes clear. And something that, some of you have got that to look forward to, I guess. But just be aware that this is just as common with professional traders that get professional training, right? And, when you hit that low point, you just think it might not be time to change what you're doing, right? So when you hit that low point, you might actually be a lot closer than you think. Now, it's a good time now. If you have any questions, you can type. I will go up and see if there's any questions earlier. What we looked at today is 6 factors of success that do make a real difference to trading, and 6 factors that most prop traders will just take for granted. But they are things that push you in the right direction, but from different angles. Elements that both improve your trading and also give you the ability to track those improvements. And you've had a glimpse, obviously, along the way of kind of our interpretation of those elements. Now, what we do, without doubt, what we do has helped a lot of traders succeed, but it's not for everybody, right? So it's not so much a matter of needing experience for this. In fact, for newer traders, they've actually got a lot less bad habits. It's just that what we do is just going to fit some people better than others, right? It doesn't mean you're good, doesn't mean you're bad. There are some people, to be honest, there's also the fact that some people just aren't ready to accept that pulling money from the market might involve some work on their behalf, and to be honest, it's no fun, really no fun working with people like that. It's a real bind on us when we get somebody who's not willing to do any work and just, being very, very needy. So we're quite happy to turn people away. So I can't guarantee that what we do is a fit for you, but we do have a way to find out and have an interesting discussion in the process. We've got this thing we call the dollar trade review, which is a 20-minute one-on-one session where we just have a discussion about your trading experience, what worked, what didn't work, what your goals are. It's really important to understand your goals and how this is going to fit in around that, and how you can personally, the financially, how you can get to those, how you can support getting to those goals from where you are, and whether what we do could fit into that picture, because we don't want everybody to start again. And if really, if it involves starting again, but you don't really need to, you've got another path, then we just recommend that, So if we can say, well, you're doing options, you're doing really well with options, you might just want to get some training off the options guy, really not much point at the stage you're at to come and switch over to futures. So even if we're not fit, we can often recommend things to look at that would be better and better suits them in your position. I do know a lot of people in the industry, so I can usually give some pointers. We just don't do many of these every week. They usually run over 20 minutes. It's kind of a dollar trade review. It's supposed to be a 20-minute thing. It's very rare on those 20 minutes. And if you are interested in that, just sign up here, Jigsaw Trading/review, and you can actually go there, pay the full $1, and book the review meeting at a time to suit you. So with that, let me just see if we've got any questions. Okay, so porcupines first. I struggle to find a balance between overtrading and taking small, frequent trades. Trade crude and shoot for 2 to 5 ticks a trade. What's a reasonable amount of trades to take in a day? Well, that's a very good question. It kind of depends on your technique. People that overtrade, in my experience, people that are trying to trade high frequency, of generally speaking, they've got too many reasons to take a trade. So as well as, we talked earlier about, taking smaller chunks out of the market, and people being able to accept going from zero profits to kind of smaller profits as an initial move, you have to stick to a very limited number of reasons to enter the market. Don't like to use the word setups because it sounds a bit mechanical, but I would recommend, if you're trading too often, I would go and find one good setup. And for 2 to 5 ticks a trade, if you're looking at the first couple of hours of the after 9 a.m. Eastern, reasonable number of trades, I would aim for 5 or 6 trades an hour if you can find a technique. So, and obviously it's not going to be there all the time, but usually the reason for overtrading is people have got into this thing, they've accepted becoming a discretionary trader and think that means you don't have any rules, you just click whenever it looks good. And so I would avoid that and just try and make sure that you've always got a reason to trade and that you stick with a very, very limited number of reasons to get in, or a very limited number of setups. So saying, if I tell my spouse how it's really going, she would destroy my computer and choke me to death. That's a really funny thing. Probably one of the best things you can do as a trader is actually tell your spouse how you're doing at the end of every day. But I honestly believe that if you're with somebody, if you're with the person that you actually should be with, they're going to understand. But that's a brilliant opportunity to have accountability, right? In a prop firm, they've got a manager breathing over them, right? you've actually got somebody who likes you at home. It's a lot more friendly. So you can. It's hard when if you've been trading for 3 or 4 years and you haven't told her anything about it. It's very hard to say, look, I'm not doing very well at this. I'd like to report my results to you at the end of every day. And it's a scary thing to do, and you probably think it'll start a lot of arguments, but that just means you don't know your wife very well. It's a really good thing to do because then you've got accountability, right? And people pay good money to be accountable to somebody. There's always a question, what correlated markets are good to watch for crude? There really aren't good ones. I mean, you've got the breakdown products, the gasoline, heating oil, you've got natural gas. But crude's a beast that moves on its own. I mean, if you look at it recently, you look at it yesterday, the start of yesterday, it was moving with the S&P, right? And that has been the case over the past, 6 to 9 months. There aren't really good correlated markets with crude, but there's so much good momentum in crude that kind of makes up for the fact it's not really good for correlations. But yeah, I mean, there are people spreading crude with other markets. So obviously you can look at the markets people are spreading with crude, and that is definitely a good correlation. And trading the moon was good. Any other questions? Okay, Neil said, also look for how much you normally risk on that trade. Absolutely, Niels, yeah. It's very important to look how much you're risking on your trades, and how many stop outs you can afford a day, right? Because if you're trying to for high frequency trading and your risk per trade is 500 and your the most you can risk a day is 500, then that's not going to work. So definitely, Niels, that's a very good point. Do you recommend trading rangy or trendy markets for scalping? It doesn't really matter. So there are some market making techniques that you can use on rangy markets, and there's some market making techniques you can use um, on fast moving markets. What I would say is it comes down to your personality. So when I used to hang out on trading forums, which I don't anymore, but there used to be questions. I always used to, even as a novice trader way back, one of the questions that I used to see asked was, what's the ideal personality type for a trader, or what are traders like? And it's like, it's one of the few questions that is probably stupid because it doesn't matter, because you can't change your personality, right? So what I would say is when you look at which market you want to trade or what market conditions you want to trade, if you're the kind of person with a short attention span, you should go nowhere near slow markets like the treasuries, and you should stick with faster markets, because if you don't, you're going to be you're going to lose focus. So I think it just depends on your personality. Now, obviously, any market is going to revert to ranges, and it's going to go to times when it's in a trend as well, and that can't be helped. But there are markets overall that don't move very much, and markets that move a lot. So the extremes, you've got things like the DAX and the S&P in the past 2 weeks, and that's an extreme volatility, way too much for me. Crude, I find, is just about right in terms of a volatile market. And things like US Treasuries, I couldn't watch. I'd literally be on Facebook if I pulled up a US Treasury down. Well, I'm trying to use day trading techniques for legging into option strategies. I wish I could comment, but it's just not. I don't know many options traders. I don't know anything really about options trading. I just know what I know. So, unfortunately, Hedgehog, I couldn't help you in the slightest with that. So sorry about that. I can only comment on the markets I know, unfortunately. Okay, well, I think we've got another presenter on soon. Do we have Danny back? I might have to just sing. I might have to do a song and dance. Well, if he's not back, do we have the other presenter in the room? Somebody's queuing up now, I think. You haven't seen me dance, Niels, to be honest. It's not pretty. Okay, guys, well, I'd like to say thank you for your attention. Really do appreciate it.